Let's go. Welcome back, fail-safe investors. My name is Terry, and if this is your first time to the channel, welcome to Fail-Safe Wealth, where I give you advice on how to make some fail-safe investments. So, in today's video, we're going to cover a topic that I'm pretty sure, about 99.99999% sure that you already know or is familiar with: Coca Cola. So if you are living in today's time, I'm pretty sure you've either seen, come across, or know someone that know or seen the Coca Cola brand. Everyone has seen the Coca Cola brand. Coca Cola is the world's largest non-alcoholic beverage company. The world's largest. It doesn't get any bigger than Coca Cola. So that's the one benefit that they have going for themselves: brand recognition. Everyone knows the Coke brand, and they probably are the greatest at marketing and advertisement. I mean, who can take a polar bear and associate it with Coca-Cola and make it something magical? So listen, with Coca-Cola, it is a huge company, but that's also its handicap. So because they are so huge, the chances of them growing any bigger is slim to none. They are the #1 non-alcoholic beverage company. How much bigger can they get? That is the one question that we have to ask. How bigger can they get? So if you're looking for a growth company, this isn't that one. But what I will say, this is definitely a value company. The company been around for 133 years, brought in $37 billion of revenue last year, has 62,000 employees, and are big. And if they have any competition other than Pepsi, they usually try to buy it or get in on that market. So Coke has over 500 plus brands. So of course you got the Coca Cola, but a lot of people don't know they have Simply. They have dairy products like the Core Fairlife, like milk products. They have tea products, and then they're trying to branch into coffee. So with Coke, one good thing is they are trying to stay as innovative as they can. So they did make an acquisition of a couple companies that will help them expand their brand or also into different markets like coffee. So they bought a company called Coast. I'm not sure if I'm saying it right. I'll show the slide in a minute. So they bought a company called Coast for like $4.9 billion, and it's like a coffee company with retail locations. So Coke is making some big moves out here in the world. But one of the handicaps or cons with Coke is that since they're so big and they operate around the world globally, they have to follow all the rules of the countries that they're in. And also another risk factor with Coke would be that obesity is a big topic right now. You know, the country's trying to get healthy. The world is trying to be healthy right now at this point. So with the world trying to be healthy and obesity being a big thing, a lot of people want to cut back on sugary products. So that's a big risk factor with Coke that might face them down the road in the future if this trend continues. Another risk factor is water pollution or water shortages. So the main core business of Coke is their beverages. That's pretty much all they do, really. So they have either syrup or their finished product, or what they might call the actual bottled Coke, or the finished product. They might have like the waters. They also sell Zico water also, like water, Simply Lemonade. They have finished products, and they have the syrups will be the concentrates. So the concentrates is 55% of their income, and then the finished product is 45% of their income. So the reason why water shortage might be a big risk factor with Coke, all of their products need water. So that's why I say it is very important to understand the company that you're looking into. It's very important. You have to know how they operate, what segments they operate in, and all of that. So I'm gonna ask you a question, and I'll answer it at the end of this video. What region do you think Coke's most revenue comes from? I'll let you guess, and I'll tell you at the end of this video, but you might be shocked. So let's start with a couple numbers that you just need to know. So Coca-Cola, ticker symbol KO, has a market cap, or should I say a very large market cap, of $195 billion. So that is crazy. That is a very large company, and a price to earnings of 19. So like I said, with price to earnings, you wanted to keep it low. So like I said, mentioned with the price to earnings, that is a multiple of the earnings. So in Coca-Cola's case, you're spending $19 per every dollar earnings per share. So that might be considered high, but like I said, Coca-Cola is a company that's not going anywhere anytime soon. So it's not a bad investment, and that's not high in the case of Coca-Cola, but some people might say that that's overvalued for a company like Coca-Cola. That's for you to decide, not me. Anyway, Coca-Cola has a dividend yield of 3.6, which is pretty good even in times like these when the economy has slowed down. And they earnings per share of $2.32 from the last 12 months. So this isn't pretty bad numbers, but remember, like I said, you don't just use those numbers to evaluate a company. You pretty much take those numbers, the financial statements, and how the company makes money and things that the company has going for itself, and consider its risk factors to determine if this is a fail-safe investment for you. Another thing that worries me about Coke is how much debt that they have in bonds or insurance debt. They have like $23 billion in debt from like bonds and all that, and that have interest on it. Remember what I told you about bonds? Bonds pay interest, so Coca-Cola has to pay interest on those bonds. One positive about Coke is since they've been around so long and are considered so stable, and they have a huge chunk of their industry, in times of recession, the Coca-Cola share price isn't hit too much. So in the last 3 months, Coke only lost about 10% of their share price. And that's probably from people that needed that money. So they probably sold the company or sold their shares just to pull that money to liquidate for themselves. Coca-Cola isn't a bad company. It's actually a really value company. Like I said, this is a long term. It probably won't grow too much, but look at it as somewhere to park your cash until you need it in the long term. And they also pay dividends, so that is a great thing. They're actually considered one of the dividend aristocrats, as some people might say. With all that out of the way, now let's get into my favorite part of looking into a company, the financial statement. Like I've already mentioned before and earlier in this video, Coca-Cola had $37 billion in revenue from last year, and I'm pretty sure they've made more than $37 billion because this is a global company. They operate with subsidiaries and all that, but we're just looking at the numbers that they filed with the SEC. So this is probably just Coca-Cola company, the American company, or this might be the preferred stock or the Class A shares. Some companies have a Class A, Class B, Class C shares, but we're just looking at ticker symbol KO, Coca-Cola to be exact. So they were able to keep $11 billion or a little over $11 billion in cash and short-term investments from 2019. So that's really good for your cash or money that you have or can liquidate like that. And their current total assets is $20 billion. But when you look at their total current liabilities, which is their debt or current liabilities that's due within this year or the next 12 months, it's $26 billion. So that's not exactly good for a company this size. And that's not good for any company to be honest. You have way more debt due within the next 12 months than you can liquidate. Now, I don't see their business slowing down, so you can look at it like this company can't operate with debt, if that's how you want to look at it. I personally probably wouldn't put my money with them. To me, that just shows bad management. Even though they do own the market when it comes to non-alcoholic beverages, I still would be careful about them. Let's just say that. I wouldn't say I wouldn't put my money with them, but I'd definitely be careful. But moving on. So Coca-Cola has a total assets of $86 billion. So if they were to liquidate everything, they could have $86 billion in the company. And when you look at their total liabilities, which is $65 billion, then the numbers start to weigh out a little bit better. So they're not as bad as you would think when you weigh out their total assets all together against their total liabilities all together. 86 to 65 is a much better ratio. And moving on to the income statement. So without going through every line of the income statement, I personally like to look at the revenue they generated, which was $37 billion, and then I like to look at the net income from that. So in Coca-Cola's case, they had a $37 billion in revenue, and they were able to keep $8.9 billion in net income. And like I've already mentioned, there are three financial statements: balance sheet, income statement, and cash flow statement. So then when we look at the last one, which is cash flow statements, I don't know what everyone else do, but I personally like to just get the free cash flow, which is money that's left over after you take out the capital expenditures and all of that good stuff. So to get the free cash flow, you take the net income, which was 8.9 billion, and then you look at the capital expenditures, which in Coca-Cola case was 2 billion. And when you subtract 2 billion from 8.9, you're left with 6.9 billion in free cash flow. So this is a profitable company, but they are so big and so huge that, like I said, the chances of them growing any further is slim to none. And if you've been following their stock price, it doesn't change too drastically. I've been following Coca-Cola stock price from like 2014, and in like 2014, if I can remember, I think it was like 30 something bucks a share, or 30 or 40, maybe around there. And then right before March of 2020, it was inching up to 60. So yeah, it grew, but not by that much in that time. I mean, the whole entire market as a whole grew. So it didn't grow too drastically. It pretty much has slow organic growth, which isn't bad. And even Coca-Cola themselves have reported 4% growth increase from 2018 to 2019. Now, I know you're thinking like 4% isn't that much, but when you have 4% growth, when you're talking about billions of dollars, 4% is a lot of money. So, like I said, that's just my information, or the information that I found and wanted to share with you on Coca-Cola. It is still your decision if you want to invest in Coca-Cola. Like I said, I'll just give you advice so you can make a fail-safe investment. And so if you haven't already, hit the subscribe button, hit the like button, and good luck. Let's get it, let's do it. All right, so if you're still here at the end of the video, I made a promise that I'll let you know what's the biggest region that Coca-Cola operates out of. And before I tell you or give you the answer, I'm kind of going to give you a hint. So Coca-Cola operates out of North America, Latin America, Asia Pacific, and then they group Europe, Middle East, and Africa all in one region. So if you still don't get it from there, then it's Europe, Middle East, and Africa. They say they have 2.2 billion consumers in that region or segment, and that's pretty much considered their biggest region. I think they made like 3 billion from that region alone in their revenue. So there you have it.